What's going on, guys? I just wanted to show off the strategy that I learned in the past 3 months that got me funded. And what even is funding? So let me start there. Let's go to Apex Trader funding. This is just one company, and there's plenty of different companies out there. You just go with the one that is suitable to you. So I'm not promoting Apex at all, just showing you how I got to where I am right now and what the goal is with this. So these companies, you pay, let's just say for a $25,000 account, you pay, if they have 80% off, it's like $30 to take an evaluation. So the company evaluates you. If you follow their rules and you're a good enough trader, they will fund you up to $25,000 if that's the one you did. They actually go all the way up to 300,000, but the bigger the account, the higher the profit target. So I like the 25K accounts. They're easy to pass, and if you stack them up, which this company lets you get up to 20 accounts, you can that's about $500,000 in funding that you can take withdrawals on. So this isn't money you can just spend, but you use their money to trade instead of using your own. And so there's really no risk on your part. And if you fail the account, you try again. But now I currently have two 25K accounts currently active with Apex. Top Step is also good, but yeah, those are the two I use, Apex and Top Step. Top Step is nice because you can take daily withdrawals. Um, Apex is nice because they always have discounts and their accounts are super cheap. The reason most traders start out doing this is because to start trading, you really need a lot of capital, and most people don't have that capital. So these companies really just give you the opportunity to increase your capital quickly. Like if I had $100 account and I was just trading with $100, I'll probably make like $1 a day if I'm risking 1% a trade. But when you have a $25,000 account that the company provides for you and you prove to them you're good enough at trading, now 1% of that is what? $250. So this account's $30, and when you pass it, it's like, okay, do I want to spend $30? And I'm a good trader. I know how to trade. So I'm gonna spend $30 and get a $25,000 account. Or am I gonna throw $30 into my own personal account and make 1% of that, which is what, 30 cents? Like you do the math, but when I first got into trading, I was like, man, this is too good to be true. But technically, but i- if you acquire the skill set of trading, which it's very, very hard, if you're good enough at trading, then really this just works in your favor and you win and the company wins. Because if you're a good trader for the company, then you're making money and also they're making money too. So I think the profit split with Top Step is 90-10, and the profit split with Apex is you get 100% of the first $25,000 in profits, and then they put it to 90-10. And Top Step, actually, let me correct that. They're 50-50 split at first, but once you have 30 $200 days, then the split goes to 80-20 or 90-10, I believe. But either way, it's a super good deal. This is what most traders are doing right now, getting capital from these companies, proving to them they're good enough traders and trading their capital. It's a lot better than trading your own capital. You make more money and you don't risk any of your capital. The company takes on all the risk. But I just wanted to show the strategy that got me funded currently. And here's a couple accounts I'm logged into right now to show that I actually have them. So when it says PA, it means personal account. Challenge has been passed. This $25,000 here is currently my capital to trade with. I made 247 last week on this account. Once it gets to 1600, I'm able to take a withdrawal every 2 weeks. This account right here is the same thing. It started at 25,000. It's a PA account, it's personal account. Last week I made 1,183 on it. Once it gets to 1600 as well, I can take a withdrawal. So that's really just how it works. I know most people getting into trading do not understand. They're completely clueless and have no idea what what funding companies are or prop firms are. And Yeah, I trade futures. I used to trade forex, but futures is a lot more regulated and there's not really fishy stuff going on. So it's all legit. We trade straight from TradingView through Tradeovate, top step or Apex. But yeah, that's all about what funding is and how to get funded. Now I'm gonna show the strategy that got me funded after started trading almost a year ago now, but the past 3 months I've been trading ICT concepts. Um, I started out trading retail methods that obviously don't work. People are using indicators, people are using trend lines and support and resistance and all this stuff that really is set up for them to fail. Then after 9 months, I realized, man, none of this is working. Like none of this is working, and I see all the successful people are trading ICT concepts. So I looked into ICT, got the basic knowledge of ICT, the 2022 model, the silver bullet, and then I found Dodgy's DD. So he is a 21-year-old kid. I think he lives in New York. He made his own strategy based off of ICT's basically 2022 model. He calls it the Ifvg strategy. So instead of just blindly buying a fair value gap, he's waiting for these fair value gaps to get disrespected and inversed, and that's his entry. Super high win rate, way better than any other strategy I've ever seen. So as soon as I saw it and I started testing it out for myself, I was like, man, there's nothing like this. Like this literally, it has an 80, 90% win rate. Like sometimes you could go a whole week without losing, and that's the name of the game. You win more than you lose, and you will stay profitable in this industry. And eventually, once you have enough capital through these funding companies, you will be able to make a full-time living off of this, and you won't need your job anymore. And that's where I'm at. That's what I'm trying to get to. But here, I'll show you the strategy. See, right when I look at the charts here, what are we at? We're at 8 p.m. here. So this really isn't a good time to be trading. This is Asia session, but I'm going to show this example just because it's textbook. Show a couple examples. We didn't tap into that fair value gap here, but we have this fair value gap here. So I know order flow is bullish here. I probably wouldn't take this trade because we're in Asia session, but it looks textbook. This is how most of the trades are going to look. We're either sweeping liquidity and inverse in a fair value gap with a nice V-shaped recovery like this, or we're just delivering from a fair value gap because price moves for two reasons. Price is moving either seeking liquidity above old highs or below old lows, or price is rebalancing inefficiencies in the market. And those are really the only two reasons why the market is going to move. But right here, as you can see, we swept all of this liquidity here. Swept all this liquidity, took out sell side liquidity. We repriced and came back into this inefficiency, which is a fair value gap, very big, obvious fair value gap. And then we rejected the fair value gap and we disrespected this big obvious one. I don't really like this one a whole lot now, actually, that I'm seeing it. There's multiple in this leg, but if you were to take this trade, you would have to wait for this last one to get inversed in the leg. That's why I like one fair value gap in the leg. Also, this entry would have been invalid because the entry was we enter on the candle close. That's how Dodgy taught us. We've done a lot of back testing, and this is the rules I follow. It has the highest win rate and is profitable over time. But we enter on the candle close here. Since it hit our internal liquidity, which is this high right here, this would be invalid because when price closes above these inverses, I would say almost 90% of the time we come to this internal liquidity at least. And so we always know it's going to be a free trade, meaning we can set our stop to break even, which keeps the win rate very, very high. So let's say you have 10 trades and five of them are break even, but the other five are wins. It's like, do you want to set your trade to break even or do you want to take a loss? So break even is always going to be better than loss. Dodgy promotes that a lot and teaches that a lot is set your trade to break even. This one was invalid, so I'm going to find you guys another one that was valid. Here, I can see it already right here. And this one didn't go that far, but it gave us what we needed. Actually, the time was 1:24, so it was the beginning of the New York PM session right here. At a fair, we were delivering off of this fair value gap. We swept liquidity and we inversed this. You know what? This entry is invalid as well. Sorry guys for the not so great examples. I'll find a couple here. They happen every day. Um, it really depends on the time frame too, because if you see if you see a bunch of fair value gaps like this on the 1 minute, if you go to the 5 minute, I bet you this is just one fair value gap and that would be textbook. But for time's sake, I'm going to stick to the 1 minute time frame right now. So as you can see right here, we swept liquidity with no displacement. And then this is pretty much a 2022 model right here, which I don't trade. But you had, look, your little market structure shift, probably delivering from a higher time frame PD array to the left. We had a market structure shift. This is not how I trade, but a lot of people probably shorted this one. This is what ICT teaches. We wait for this inverse. Once this inverses, that's our confirmation to get in short, and we're at least going to target internal liquidity, which is right here. Um, but yeah, most people would short this blindly, but you don't know if it's going to hold. So that is why we wait for this confirmation to get inversed. And from here, 76 to 71, that was 5 points. And you take 5 points, probably wouldn't take partials because the risk reward is not so great, but we would at least set a break even. And you know this is a free trade. And then guess what? Price comes all the way down here and takes out these equal lows and then reverses. And also equal lows and equal highs, a very strong draw in the market. Dodgy teaches that a lot. But this would have been more than 10 points. And really, that's all we need is 10 points, 20 points a day. Like you're good. You know, if you can simply manage to bag 40, 50 points a week, like you can make a really good living off of that. That's where I'm at right now. That's my goals. I'll show a couple more examples. And if you don't understand anything I'm saying, I recommend you go study ICT's mentorship. Dodgy's has a lot of free stuff. Everything you need is free. When I first got into this, I paid for education, I paid for certain things, and not realizing that most of the best stuff was free. You just really had to figure out what was real and what was fake and what was good and what was not. So it took a lot of testing. The first year of trading for me really was just figuring out how to do this. And now that it's pretty much set in stone how to do this, it's like, okay, let me just keep doing the same thing that works and double down on that. But here, I'll show you some more examples right now. See, this was good here. There we go. We got equal lows. One, two. These two are perfect. Four equal lows. We know market's going to come back to that. So let's look for a short. If I was here on this play, there was multiple shorts that worked out. These shorts worked out with that inverse, but this one was cleaner. Actually, do we make equal highs here? No, see, we swept this high with no displacement. So when you see us sweep this high with no displacement and then come down and inverse this with an order block put in right here, this is textbook. This is A plus right here. A plus. So we have equal lows below. We know we swept liquidity from above. And we inversed 1, 2 fair value gaps to the upside, which means we're violating PD arrays in the opposite direction, and we're putting in order blocks showing us order flow is bearish right here. Enter on this, your entry would be here at 37. Your stop to break even would be here, and you never would have got stop to break even. You would have this trade. See, you would have gotten, there's a lot of LR here, which is low resistance liquidity. And normally we target the bottom of that. See, if we targeted the bottom of that, you would have got stopped to break even. But here at your entry was 37. Yeah, after 10 points, we would have taken partials. So you would have taken some partials and had a break even trade. And that's a textbook setup right there. But over time, you'll see that taking partials and getting break even trades, like over time, that'll just add up, and you'll eventually be just compounding your money. And that's the goal. That's the goal every day, compounding your money. And if you take a loss, which happens in the game, then you take a step back and you don't get emotional about it and figure out why you lost. This was another textbook entry. I mean, we had multiple in this leg, but this was good because I seen this momentum. If I seen this momentum in live time, I would have taken this. I know I'm going back and it looks like I'm cherry picking examples, but these are the same trades I would take if I was seeing the market. Like if I wake up at 7 a.m. and I look at the market and I see something textbook or like a signature in price that I see all the time, I'm gonna take it. Like any one of these examples I'm pointing out, I definitely would have taken in live time. It's funny because Dodgy's the one who taught me how to trade. And now it's almost like our brains are the same. When he sees something or when he says something, I literally was already thinking it or already gonna say it. So it's kind of refreshing to see, but that's how I think anything in life or businesses, if you're learning from somebody and they're doing great, you want to try to be just like them, you know? Ultimately being yourself, but replicating what works for them, so then you have success in what you're trying to do. But yeah, here was a textbook entry. I mean, these inverse fair value gaps literally happen all day long. Like you wait for a single fair value gap to get disrespected after we take in some sort of liquidity or we're delivering from something. It's hard to short this market because we're at all-time highs, but that's a whole nother video to talk about. Like this. This trade was invalid because we hit the internal low, but I mean when you get this consolidation up here and this violation of these PD arrays, I know I drew one and then we got two. When you see this and then this dump here, actually this is age session. You shouldn't even be trading, but this is a signature and price to recognize, especially when you see order flow is bearish and we're respecting these PD arrays. We did not deliver from either one. Technically, we did on a higher time frame that would have been. So we were delivering from a higher time frame PD array. We violated these, and boom, we dumped. Here was another one. I actually caught this move on a Sunday night. This was when the market was open. It just opened, and I knew we were gonna pump here. The way we swept liquidity down, we had this. It's like a knife pattern. I don't really trade patterns, but when you see this V shape like this, inversing a singular fair value gap, you know this is good. I entered here. I took it to these equal highs. I noticed when market opened, we left these equal highs, which is a good draw on liquidity. But yeah, if you want to check out this strategy anymore, go check out Dodgy's channel. Shout out to him, and go check out ICT. Shout out to them. Thank you for giving me your time. I appreciate you. God bless you all.